So last Thursday, Sofi announced that they will be redeeming all their outstanding warrants by 5 p.m. on December 6th. Now, this news made some folks ask a lot of questions and also some confusion around the warrants and the whole redemption thing. So let's do this. In this video, we'll go over the warrants redemption and also what it means for Sofi stock and how I played the news. Yes, I have made a big bet on Friday that I've shared in my previous videos. But the information that I'm sharing with you today basically tells you why I made that bet that I made on Friday. There will be a lot of charts and a lot of information. So on Thursday, Sofi released right here, actually, let me just go to the news right here, that they will be redeeming all the outstanding warrants. Now, of course, these are public warrants and they are due or to be redeemed by 5 p.m. on December 6th. Now, that news sent the stock price down 3% after hours. And on Friday as well, of course, as we know. This was a very welcoming news and I was actually super excited to see this happen now. So please let me know in the comments on how you played warrant news for the Sofi, and also if you enjoy content like this, then give it a thumbs up. Okay, so coming back to the video. So before we dig into Sofi warrants, let's take a look at what warrants are and what redemption means. So to understand warrants, think of them as call options that you can buy from the company. What it means is that you are saying to the company that I'm willing to place a bet that I will be buying your share at a price or higher price and at this rate in the future. This is another way for company to raise the capital. So let's take a quick look at this image, how SPAC or SPAC warrants work. So first of all, investor invest in SPAC at an IPO of $10 per unit. This is a SPAC investment. Then number two, the proceeds of an IPO are held in a trust and invested in treasuries. So then after that, for a $10 investment, each investor receives one share valued at $10 and 1/4 to one warrant to purchase at a share price of or at a price of $11.50 right here. So the $11.50 is kind of universal. Most of the warrants have that, but of course some of them have a different value. But in Sofi case, it was $11.50. Now, after that, on number 4 is that once the SPAC goes public, it tries to find a target company to acquire and bring public, which in this case, it happened with Sofi. Sofi was SPAC. Then number 5, redeem investment or shares in the new company. So if the SPAC finds a target company to acquire, each investors can vote to get their $10 back plus interest or get shares in the new company. Usually it's share in the new company or shares in the new company because that's why they initially invested in the SPAC, because they know that it'll be more than $10. Then at the end, if the SPAC does not find a target company to acquire, the investors get their $10 back plus interest. In this case, this is not the case because we have already found a target company, which is Sofi, and now Sofi has invited them to redeem the warrants or basically cash out. Now, you can actually go, of course, on the internet and read about the warrants in detail and how they work. But for this video, let's keep it simple and also look at few standard things that majority of the warrants have. So in this image over here, this explains warrants in a very good 3-step process. A stock warrant gives the investor the right, not the obligation, the right to purchase the company's stock at a specified or a specific price and on a specific date. However, once the time elapses, it becomes worthless. That's number 1. Number 2, stock warrants are long-term instrument and tend to have longer period before expiry, usually 5 year, more than 1 year, but usually 5 year, but the company can call them before if certain conditions are met. Lastly, the exercise price is typically above the market price at the time of issuance, which is of course the case. Okay, so now let's look at some of the common steps or common things in the warrants. And I know this is a boring topic, that's why I'm going over quickly to kind of get over this and then show you some very interesting stuff. So a typical setup involves SPAC issuing units to third-party investors at $10 per unit, which is what happened. This is what they will get: one class A ordinary share right here, a fraction of a warrant, typically in fractions of 1/2, 1/3, 1/4, or 1/5, to purchase one class A share at an exercise price of $11.50, a public warrant. This is a public warrant. Public warrants generally have a term of 5 years from the date of an acquisition and includes a redemption feature in which the company can call the public warrant, which in this case Sofi did. If the Class A share trades above a stated price, usually $18 is the stated price, for 20 of the 30 consecutive days. And that's what happened. 20 of the 30 consecutive trading days, Sofi traded above $18, and that's why Sofi called the redemption of the warrants. The redemption price is generally set at some nominal amount, effectively forcing the holders to exercise their warrant when called by the company. Now, we know similarities in warrants. Next, I will share a screen that shows warrant prices for Sofi over the past few weeks. So take a look here. Right here is a screen. This is the screen for warrant prices, not for the stock prices for SoFi, and I will bring your attention to two things here. So look, SoFi warrant prices have been following closely to the stock price, and we can see that when SoFi announced the redemption, the volume on the warrant also went up like crazy. Look at here. So this is like warrant on October 11th is like $7, $8, $9. So if let's say I would have bought 100 warrants at that time, it would have costed me times 7.1 or 1.8, whatever the cost is. And then right now I would have gotten each share if I were to pay $11. So let's say that I bought a warrant for, to keep math simple, for $5 each warrant. And then right now they are saying, you know what, you can come and redeem the warrant. So right now I will be paying 5 plus 11.50. So I'll be paying $16.50 for the warrants. In return, I'll be getting one share of SoFi, which is right now at $22. It's a great deal. But over here, if you see, if I would have paid $11, and then now if I were to go to them, I will be paying 11 plus 11.50, so about 22.50, which is of course the price of the stock is right now, maybe a few cents here and there. So that's why people, those who bought the warrants starting 11/1, they did not get much better deal. But people, those who bought the warrants till October, they got a better deal because even $1, $2 more than what they're getting in the SoFi stock right now. But look at the volume. Before the warrant news was announced, people like the volume was just in like 200,000 range, maybe 719,000 over here. And as soon as the warrant were announced, we got a huge volume of 1.2 million. But before that, look in October when people paid like $7 for the warrant, look at the volume. 3 million, 2 million, 1.6 million. This is huge volume. So these people, those who basically made it over here, these are the people, those who really cashed out. And that's the worry. People, those who made or bought warrants at this price, right now, they can come out and they can sell for like $4 or $5 profit on each warrant or each stock, basically in this case. And that's why the worry is that as soon as you call for redemption, there will be a lot more people, those who bought the warrant at a cheaper price right here, $7.27. And now they can come in and they can basically get a SoFi stock for that price, and they can come in the open market and then gain from that. If I bought like a million warrant, that's like almost $5 million if there's a difference of $5 between the stock price and the price I paid for the warrant. And that's the main thing that why people are saying that, you know what, there's a lot more liquidity, or there's a lot more people, those who are going to come and sell the warrants. The reason why SoFi did it before the catalyst, because people are holding back. People are not selling because people are saying, you know what, we are going to sell after the earnings, if the earnings are blockbuster, or after the bank charter news, because we know those catalysts are going to push the stock further so we can make more money. And that is why it was really smart for SoFi to come out and redeem the warrant before the catalyst. But at the same time, when the catalysts are over, there's a higher pressure or maybe a big sell-off because all these warrant holders would like to cash out. My opinion, again, I could be completely wrong, but this is what I think. So there are a few ways redemption can happen. Number one, the warrant holders get 1:1, basically one warrant equal one share, but they have to pay $11 and for the price of the warrant that they paid, whatever they paid over here. Price is usually $11.50, as I said, and the usual ratio is 1:1. So if you have 100 warrants, you will get 100 shares for the price paid of the warrant plus $11.50. Then the second way is cashless. This is where there is no $11.50 charge. And for that, you will get a fraction of a share per warrant because you are not paying SoFi anything. So in this case, they will be getting 0.361 shares to one warrant. So if you have one warrant, you are going to get 0.361 shares of SoFi. Now in today's price, if you purchase the warrant, let's say at $11, and if you're only getting 0.361 share, then that seems like a ripoff to you, because as you should be getting half the share because it's $22 a share right now. But the benefit is that you don't have to pay anything extra to SoFi. Okay, like no $11.50 or anything. Whatever you paid for the warrant, that is it. And if you have hundreds of warrants, then you can recover the money you paid for warrants when the stock goes up. So in my opinion, this is great for SoFi in many ways. First, they have reduced the dilution that may have happened later on. And if the catalyst run would have been over, then they would have really tanked the stock with the news. I mean, just think for a second. Let's say that the bank charter was already announced and the earnings have already been out. Then in that scenario, what was stopping folks from taking profits? Nothing really. I mean, I would have also taken some profits from the table, as this could have resulted in a long and I would say larger slump than what it is right now. So with that, let me show you what this did to the SoFi stock on very important metrics. We will look at historical prices, how SoFi volatility has changed, and also some massive movement in the volume. Let's start with the price and the volume chart. So this is the price and the volume chart. And as you can see, SoFi's volume has been basically not that high. If you look in last week of October, the volume was about 6 to 8 million shares and price was being stable over here, which is amazing. And over here we had a 28 million volume day, price of 22.62, and then after that 20 million, 16, 10 and 11, while the price maintained in that range. And that's why I said it's a new support that we have found between that $22 and $23, which is super damn exciting. And when I'm recording this video, it was about close to 9 million shares were traded at 22.82. By all said and done, I could see this another as a 10 million share day, or trading volume could be around 10 million. Now from this, let's take a look at how volatility has changed in the last few weeks. Take a look here. So this chart of course shows how volatile SoFi stock was. So there is a kind of a trend forming here. So if you pay attention here, I'm going to actually mark it with red. If you see a trend here, look at this, and look at this. It's kind of similar where it remains volatile for a certain period of time, usually what I see here for 2 weeks, right here. It becomes volatile for 2 weeks, then it comes down and gets into this low category of being less volatile, then goes up, then it's remain volatile for 2 to 3 weeks, then come down, remain in this category, and then goes up again. And this has been going on for a very long time for SoFi. And this is where we are forming the new higher highs and we are forming the support. Now, what am I doing? When I'm looking at this chart, I could see that how volatile the stock is right now, this could come down. So now, unless we have some huge catalyst, which will be earning that's coming up, and if the earnings are blowout, then that changes everything. Otherwise, at this rate, I will not be buying any options. I will be selling more options because again, this is very volatile right here. And you see over here, it dipped, and that's when I sold, or that's when I bought those calls. But this is where I will be basically selling puts, not buying calls. So when it drops to this level, this is when I will be buying calls. So this is what I look at when I'm doing options trading, that okay, how volatile the stock is, will I get higher premium or lower premium? All right, so now let's take a look at this. So this is the stock chart, and as I was telling you over here, so on a daily chart, SoFi is right now sitting on top of the 21-day moving average. It tried to come down, but it found the support, and you see this big green candle in November, and then boom, it lifted the stock up. And right now, as you can see, it's sitting on top of all moving averages. So we have this hard 2480 resistance right here on a line, and if we can cross this, I would say before the earnings, and if earning is a blockbuster, then we are easily going to about $25.50 to $26 right after. And then of course we will see what they basically give us in the earnings call that will define how far up we can go after the earnings before the bank charter. And if they announce the bank charter, then we can see the stock touching to almost $30 in the short term, or $28 in the short term. That will be the time for me to take profits in my options, the trade that I already shared with you all yesterday. So I know this is a lot of info, but hoping I was able to simplify a bit more. Please let me know in the comments on how you played the Warrants news, as I would love to hear your thoughts. But regardless, SoFi is a long-term play and a huge opportunity for us investors to really cash in on this growth company. Also, we are almost ready to launch our Discord, and I have finally figured out a way that is going to deliver value to all of us, and I will make a video on that in the next few days. So consider subscribing if you enjoy content like this, because there is a lot more to come very soon. And hit the like button to help this channel reach out to more investors and traders. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.